Hi everyone, Gerard here. Today I'm going to discuss the tangible aspect of trading and why it is important from a psychological standpoint to sometimes just value the money and look at the money that you've made for the day. This and then more on trading psychology coming up. Reason I am doing this video today is to mention that yes, 1,044 I made today. Took 3 trades. One of them lasted, I'd say, about 2 hours. Another one lasted maybe an hour and a half. Another one lasted probably about 2 minutes when I just realized I didn't want to be in it. And sometimes you're going to get that feeling. So it was the S&P E-mini. It was the E-mini future oil, that's the QM, and also I did the Aussie dollar. Okay everyone, so this is the amount there, 1,044. You can see that is for today. Alright, so I had the QM, that's the E-mini NYMEX. We had the ES shorting from our level there. Okay, keep in mind it says up 21% because remember what we had said, that we started with an account for the spring challenge of only 5. Aussie dollar, I wasn't really feeling it, wasn't moving when that news came out from China. I looked and I said, yeah, I think I'm gonna get out, and it really didn't do much. So the movement was in the stocks. There was a nice oil move today as well. If you did not, go back and watch the previous video, and that'll explain some of the technical analysis and the reason why I was stalking the S&P E-mini future trade today. So do that. This video is not going to be about technical analysis. It's just going to be about psychology. And a lot of people will often post charts and everything, but sometimes people just want to hear it. I know I do. I want to hear about the psychology. After all, if trading is 90% psychology, why don't we focus more on that? Psychology of trading. But that's not what the topic is about today. The topic is about, we have begun a spring challenge. Today is the first day of spring. So I set aside $5,000 and I went ahead and I put that in an account. So in that account, obviously it's a very high leveraged account. So one, two, three. So it's going to be a very high leveraged account, starting off with 5,000. The number is insignificant. The reason that I started off first day of spring is to use that account as an example account. Now keep in mind, I am a very aggressive trader when it comes to leverage. The reason I am is because I have been doing this for over 20 years. I would never suggest, and let me just say the disclaimer right now, never day trade with any monies that you cannot afford to lose. And in fact, it's very risky and you risk losing everything. So just keep that in mind. I am happy to say I am not a financial advisor. I am also wanting to mention that past performance is no indication of future performance. Okay, so there's that government disclaimer that oftentimes people will just put on the website and it flashes really quick. Well, I want to get the point across that that's very important to remember. And I also suggest trading on a demo account, what's called a paper account, a pretend account. Always do that in the beginning to get an idea of key levels, see if things work for you, just to get acquainted with the platform. And then when you do start trading, you definitely want to use a low amount of leverage. I look at it this way. Trading is a marathon. Trading is not, I know you hear this a lot, it's not a get-rich-quick scheme. You know, you have the tortoise and the hare. You're better off being the tortoise. Now, I'm not saying, you know, maybe a scalper is a good example of a rabbit, the hare, and it's in and out quick. But I'm not talking about that. I'm talking about the whole spectrum. I'm talking about the whole picture. Yes, you can be a scalper and you can be in and out and you could trade high leverage, but you have to always understand that you're looking towards the big picture. Yes, you may do very well today, but then who knows what's going to happen when that trade goes sour. And when the trade does go sour, what are you going to do? Are you going to look at the trade like a deer in headlights, as people say, and just go like this? I can't believe this is happening. Or are you going to go ahead and get out? Oftentimes in trading, I know I've been there many times, you think it's going to go a specific way. You've done so much research on this particular, whether it's a stock, whether it's a Forex trade future, and you're expecting it to go in a specific direction, whether it's up or down. And it doesn't happen. So you're like, how could this be? How could this be? Wait, the news came out. When you're unsure, take a step back, think, evaluate the situation. If you've done your research and it's a lower time frame move and you're looking at a swing trade, then yes, you can just leave the stop in and forget about it. The main thing, as I was saying in one of the previous videos, is watch your leverage. Leverage to a level that you can handle. And as years go on, as your experience increases, you'll understand what kind of trader you are. But always log and always see what you're good at. You can't tell someone, hey, I think you should be a swing trader. You can't tell yourself that you think you should be a swing trader unless you really have evaluated what a swing trader is. You've experienced it. And then you can see for yourself, do I like to be in and out in 15 minutes, or do I like to hold for 15 days? All right, which is more of a long-term swing trade. But anyway, want to get back to I think I've enlightened some of you on the philosophy of trading a little bit, psychology. Now let's get to the money. I'm holding here $1,050. Yes, this is not enough to make you rich, but this is a point, and the reason why I'm emphasizing this today and showing you this, and I'm holding it in my hand, is because what's worked for me is to take that money out of the account sometimes. Just hold it in your hand. If you made $10,000, just look, lay the money out on your bed. Go to the bank if you keep it in a safe deposit box. Whatever it is, feel the money. There was a famous trader, I believe it was in the early... what was it, 1915, 1920s. Okay, guy's name is Jesse Livermore. Duh, it just came to me. So at any rate, I read one of his books. It was like his official biography. Everything was great in there. I mean, it's wonderful. What he did say and what made sense to me, it's one of the few things that I picked out of the book. Actually, there's two major things. He would go to the bank and he would look at the money so he can add value to what that money really is. Sometimes when you're trading or on the computer and you see the numbers on the computer, it becomes like a video game. And don't think of it that way. I mean, you can in a sense, but know that if you lose $1,000, that's $1,000. You gain $1,000, that's $1,000. Okay, you want to be motivated to preserve your capital and also grow your capital too. So there has to be a certain level of risk, of course, warranted in trading. With risk comes reward. Okay, sometimes you hear about these people, it's like, I only risk 1% of my account. I mean, I never really did understand that philosophy. Like, why would I risk 1% of my account when I can go and, start a business and take $100,000 and grow it 5 times in 6 months or a year? So I understand to a certain aspect, yes, do you want to be conservative, but you have to look at see what your style is about. What is your style about? Why are you trading? Are you trading just because you have nothing better to do, or are you trading because you want to treat it as a business? So make sure you always have that stop loss in place. So anyway, that's the reason why I'm holding the money. Not because this is $1 million and ooh, I'm rich. It's because sometimes you have to look at it from a tangible standpoint and say, okay, I wasn't too happy. I was like, I could have got a little bit more of the move. I mean, it was only a 1 contract, and the reason is because, the size of the account that I was just talking about before. The size of the account is, $5,000. We're doing this this spring trading challenge, whatever you want to call it. And the whole idea, the whole concept behind this is many people are starting off with 5,000, 6,000, 4,000. They're doing Forex and they're doing futures. And a lot of people, watch and see videos online about people who started. There's one guy at $1,500. Now this is, I think, penny stocks, and brought it up to $2 million in how many years. So things like that, very inspiring. I mean, you have to remember that a lot of you guys out there, when you start in trading, a lot of people are not going to go ahead and put $100,000 in the account, So you don't need $100,000 to trade. So keep that in mind. It depends what you trade. The bottom line is get the philosophy down.